Alright, good morning. Let's go over today's trade plan. So in the overnight session, ES tested below the recent low of 63 quarter and found buyers at 62.75, and we got a bounce back up to 1671 half in the overnight session. And from yesterday's recap, we had resistance overnight at 1670 half to 1673 half. So we got some sellers active at that zone so far. Now, heading into the day, we have to realize that so far the market is still trading within this range from like the 63 area up to 92, 93. And so far we have just been balancing within that range. Now, by default, heading into the session, based on yesterday's weakness, we're giving edge to sellers below 71 quarter to 73 quarter. Essentially below the overnight high too, but we have to be open to the market moving in either direction, and it's important that while the market's in balance, we're not locked into one view unless we're seeing directional conviction in the market, right? So as an example, yesterday the internals were really weak. Tick was spending majority of its time below zero, and ES was testing resistance, right? So in that case, we simply focused on the short side and avoided the long setups, and that kind of just kept us out of the chop, and we were able to avoid some needless losses, perhaps by getting involved aggressively on the long side, and just kept us very focused overall. So if that's the case, then we'll use that strategy again. But if the day is setting up to be pretty much balanced, no real directional conviction, then you might just want to take rotational type setups off of a support zone or resistance zone, right? So right now, if we can hold above 66 to 68, that would tell us that there's still some buying activity here, and we could get an upside move, right? So we could balance here and then get a break to the upside or the downside. A break below 66 would bring the recent lows into play, and at that point, there probably would be enough weakness in the market to go test lower at the initial support zone, 57 to 59, where we can still get responsive buyers. Now, at the 57 to 59, we just have to understand that that would be a break below balance and a test of the prior balance where ES broke out from. So we can get buyers there, and if there's a setup there in real time, we'll take it. But in order for that setup to work, or for the price action to confirm that there are indeed some buyers active here, we need to see a push back above 62.5 to 63.5, right? So we need to come back within the current trading range and then start trading above it in order to confirm the buy side. Otherwise, if you move up and you fail at 62.5 to 63.5, which on first test you probably will get some sort of failure if that happens. But if overall it just the area fails and starts heading lower with some momentum, then you want to get out of the way. So below that we can still get buyers at the next zone, right? 51.75 to 53.75, and overall all those support zones can still attract buyers in the market. The strong support is at 47 to 48, and in the 42 to 45 half range. But even the support zones ahead of that can attract buyers and result in tradable reactions on the day time frame. Now, on the upside, a break above pre-market resistance or the overnight high would bring the 76 half to 78 half area into play again, and first test of that zone, we can still expect a sell response. But if we get some pretty decent momentum and we're not getting an all-out rejection at that area, then prices might have to go higher in order to find sellers. So that's something we'll monitor in real time. We'll see kind of where is tick spending majority of its time. When it makes a move up to initial resistance, what type of tick readings are we seeing? Is it a high momentum move versus a low momentum move? If it's being pushed up there on like a plus 1,000 or 1,100 tick, that would tell us that there's some decent buying pressure behind this. So maybe you just want to get out of the way, and probably even hop on board on a 2.5 or 3.5 point rotation. Because if that momentum really sustains and continues, then we could be pushing up to the 82.75 to 84.75 or 86 level before we get any sellers involved in the market. But overall, it's just a balanced market, and we have to see directional conviction in order to take continuation type setups, right? So for example, if you're buying a pullback off of initial resistance, right? So we test initial resistance and we pull back 3 or 4 points, and you're trying to buy that pullback. Well, it only makes sense if there's directional conviction in the market and you're expecting continuation, right? If the market's very balanced and the internals are kind of mediocre, then you want to be selective and you only want to buy at the key inflection points, and you probably want to fade the market rather than look for continuation type setups. So that's something to keep in mind as well. And on the upside, we're going to have to see probably some pretty decent internals in order to get a break above initial resistance. So we're probably going to want to see the NYSE AD above plus 1,000, the S&P AD above plus 250 or 300 in order to get a sustained move to the upside. If we're working with like mediocre internals where the NYSE AD is like plus 5 or 600 and the S&P AD is like plus 100 or plus 200, something like that, I don't think that's going to be enough strength in the market to break above initial resistance. So we do want to see some level of strength, a decent level of strength to look for continuation setups on the upside. Otherwise, we can continue balancing, below initial resistance, below 76.5 to 78.5. So let's keep that in mind as well. And if there's even, minor weakness on the internals, that could be enough to hold price back from, moving much higher. So let's keep all that stuff in mind. Let's see how we react off of pre-market support and, off of the 71s, and then take it from there.